Howdy, everybody. Welcome to Liberty Call. Today is Monday, June 30th, 2025. Hope you're having a fantastical day out there in the interwebs. It is a nice day here in Colorado. Sun's out, cool breeze, pretty nice. And anyways, hope you had a good weekend. And Wall Street certainly has had a good day so far. Wall Street kicked off the week in record-breaking fashion as the S&P and NASDAQ notched new all-time highs. AI momentum, trade deal optimism, and lingering hopes for Fed rate cuts fueled the rally, while bank stocks jumped after clearing stress tests. The Dow still trails its peak, but with jobs data, ISM reports, and Trump's looming July 9th tariff deadline on deck, the rally isn't running on autopilot just yet. So before we break all the news down, I need some help from you. Give me some thumbs up, a like, share, subscribe, a follow, and press that notification bell. All right, let's get into today's markets. Dow Jones was up 0.63%, 275 points, closed at 44,094. S&P 500 up 0.52%, 31 points, closed at 6204. NASDAQ up 0.48%, 96 points, closed at 2369. The VIX was up 2.51% today. It's at 1673. Canada up 0.62, Brazil up 1.44, and Mexico up a tenth. In Europe, Germany down 0.44, the UK down 0.43, France down a third, Netherlands down 0.75%, Spain up 0.16, Italy up 0.13, Switzerland down 0.6, and Portugal down 0.89. Russian exchanges in the green today, the MOEX up 1.41, RTSI up 1.33. And the overnight markets, the Nikkei in Japan was up 0.84, Australia up 0.33, New Zealand up 0.31. In China, the Shanghai up 0.59, Shenzhen Component up 0.83, China A50 up a tenth, DJ Shanghai up 0.55, Hang Seng was down 0.87, and the Taiwan weighted when it closed on the 27th was up 0.39. All right, good stuff. Let's get to the weekly economic update. Stocks staged a broad-based rally last week on investor hopes for a long-lasting Middle East ceasefire, hitting fresh record highs along the way. The S&P 500 index rose 3.44%, while the NASDAQ added 4.25%. The Dow Jones Industrial Average was up 3.82%, and overseas markets increased by 3.04%. Stocks pushed higher. Last week opened with a rally powered by news of a tamer than expected escalation of tensions in the Middle East. Stocks continued their rise after the week's ceasefire agreement, although Wall Street appeared concerned about whether the truce would remain in place. Sentiment brightened after the White House played down the approaching July 8th tariff deadlines, solid corporate earnings, a still strong labor market, and a recovery in artificial intelligence-related stocks provided some underlying strength to the rally. As the week wrapped up, the S&P 500 hit its first new high since February. It marked the fastest ever recovery from a 15% decline for the broad market index. The tech-heavy NASDAQ also closed at a new all-time high. All right. Economic data helped too. While trade and Middle East updates powered most of the market's rise last week, a few economic bits of news also contributed to the week-long rally. For example, consumer sentiment climbed 16% in May, its first increase in 6 months. Quote, the improvement was broad-based across numerous facets of the economy, with expectations for personal finances and business conditions climbing about 20% or more, end quote, the University of Michigan said in its statement. All right. So key economic data coming out this week. Monday, Fed officials Raphael Bostic and Austin Goolsbee are speaking. Tuesday, Fed Chair Jerome Powell is speaking. And then we have the ISM Manufacturing Index, construction spending and job openings. Wednesday, motor vehicle sales and the ADP employment report. Thursday, the U.S. employment report, international trade in goods and services. Fed officials Raphael Bostic speaks. Factory orders, ISM services index, and the 10-year Treasury note announcement, and the federal balance sheet. And Friday is a market holiday for July 4th. Just one major company reporting earnings this week. Tuesday, we have Constellation Brands. Bless you, Jake. All righty, let's get to our market recap. S&P 500 set to end quarter two with hefty gains as trade war fears cool, rate cut bets rise. All right, the S&P 500 extended its rally on Monday, setting the stage for significant second quarter gains as trade tensions ease and market expectations for Federal Reserve rate cuts strengthened. All three major U.S. indices are poised for sizable monthly gains, fueled by optimism surrounding a potential U.S.-China trade deal ahead of President Trump's July 9th deadline. Contributing to the positive sentiment, Canada rescinded its planned digital service tax on U.S. tech firms just hours before implementation, signaling renewed efforts to restart trade negotiations with the U.S. Canadian Prime Minister Mark Carney and President Trump are now scheduled to meet in hopes of reaching a trade agreement by July 21st. In corporate news, Meta Platforms rose over 1% as AI enthusiasm grew after reports surfaced that the company hired 4 AI researchers from OpenAI for its superintelligence group. Oracle surged more than 4% after unveiling multiple major cloud service deals, including one potentially generating $30 billion in annual revenue by 2028. Robinhood jumped over 10% to record highs following the announcement of expanded crypto offerings on its platform. Investor hopes for rate cuts increased after weaker than expected personal consumption and inflation data, coupled with the removal of inflationary tariff threats. Fed Chair Jerome Powell's recent testimony suggested rate cuts are likely if inflation doesn't spike this summer. Markets now price in a 74% probability of a September rate cut, with some still betting on a July move. And if I could stop there, in in Powell's press conference a week or so back after the last Fed meeting, he intimated that he thinks inflation will be up near 3% by year end. So, if you're expecting a rate cut and he's expecting inflation to go back up, I just don't know. Again, the markets could affect that along the way, but based on current conditions, I just don't see a need. Attention turns to Thursday's June jobs report with forecasts of 120,000 jobs added, down from May's 139,000. Meanwhile, Trump's comprehensive, quote, one big, beautiful bill, end quote, featuring tax cuts and spending changes, advanced in the Senate via a narrow 51-49 procedural vote. Debate begins this week, though deficit concerns and House resistance could delay final passage. Yeah, they took a lot of the good stuff out of there, like suppressors and things like that, a lot of us gun folks really would have liked to have seen. And, in the end, it'll be just more of the same and, more spending, less, actually paying down debts and things like that. So, we're headed towards a Thelma and Louise kind of right off the cliff. All righty. Well, one last article here next article. This one comes from Zero Hedge. SLR, could it end the bond bear market? What is that about? This was written by Lance Roberts of realinvestmentadvice.com. On June 25th, the Federal Reserve quietly announced significant reforms to the supplementary leverage ratio, the SLR, with major implications for the U.S. Treasury market and broader financial system. Though technical in nature, the changes could create renewed demand for treasuries, improve market liquidity, and exert downward pressure on yields at a time when the economy shows signs of slowing. The SLR, implemented after the 2008 financial crisis, limits how much leverage banks can take on relative to their capital, treating all assets, whether risky loans or safe treasuries, equally. This discouraged banks from holding low-risk assets like treasuries, especially during periods of balance sheet stress. The Fed's new proposal recalibrates the enhanced SLR for systemically important banks, aligning it more closely with global standards. This change is expected to free up between 5.5 and 7.2 trillion in bank balance sheet capacity, nearly 25% of U.S. GDP. Major banks like JP Morgan, Bank of America, and Citigroup stand to benefit, gaining flexibility to purchase treasuries and participate in repo markets without triggering regulatory penalties. Increased treasury demand from banks could absorb much of the government's new debt issuance and stabilize the market, particularly during periods of volatility. The reform also eased total loss absorbing capital, TLAC, and long-term debt, LTD, requirements, reducing funding costs for large banks by nearly $95 billion. For investors, the shift suggests downward pressure on long-term yields and potentially stabilizing effect on financial markets, with significant short positions against U.S. Treasuries and event-triggering short covering could fuel a sharp bond rally. While not guaranteed, the changes tilt the risk-reward balance towards high-quality fixed income, particularly treasuries, Lower yields may also support growth stocks unless driven by economic deterioration. So really what they're trying to do is push down on yields so that it doesn't cost them much to refinance what they owe as far as the federal debt. All right. Last article here. This one comes from our friends at First Trust, the Monday Morning Outlook from Mr. Brian Westbury. This week's article titled America's 3.5-Second Miracle. So let's jam through this and we'll be done for the day. This piece highlights how American fundamentally broke with history to create a society where individuals truly can make their own history. It challenges Karl Marx's famous 1852 assertion that while men make history, they do not do so under circumstances of their choosing. Marx overlooked how the United States, building on historical documents like the Magna Carta and the English Bill of Rights, improved on the concept of individual liberty through the Declaration of Independence and the Constitution. These documents, amended only 27 times in 235 years, established a republic where power rests with the people and government exists for their convenience. Well, of course, it doesn't work like that. We as the people seem to serve the government, unfortunately. The reflection draws on Ronald Reagan's 1981 commencement address at Notre Dame, where he praised the founding fathers, a unique group of men who pledged their lives, fortunes, and honor to secure freedom. Their sacrifices established the radical idea that people born are free, possess inalienable rights by the grace of God, and the government only holds power granted by the people. Reagan emphasized America's rapid rise, noting that if the Earth's history were condensed into a 24-hour film, the United States would appear only in the final 3.5 seconds. Yet in that time, Americans would contribute more than half of humanity's economic achievements. The piece concludes with a reminder to appreciate the unprecedented freedom and opportunity we enjoy as we celebrate the 4th of July. It urges reflection on America's unique legacy and commitment to preserving the principles of liberty, self-determination, and innovation that have made this republic a beacon for the world. And it'd be nice if our people took back the government from the people running things, because they seem to think we are their slaves, unfortunately. All right. Well, that is everything that I had to ramble about today. If anyone needs anything from me, where do you want to go? DSAFinancialGroup.com. All your financial planning needs can be addressed there. Give me a jingle. I'd be glad to help. All right. Well, that's everything that I had to cover for today. I hope everyone out there has a wonderful evening. And I got a meeting in a little bit, so I got a little more work to do on my Monday, but I hope everyone out there has a great night. Talk to everyone next time. Adios.